Students, this is a simple problem to comprehensively understand bad debts, provision for bad and doubtful debts, and provision for discount on debtors. It is given trial balance shows on 31/3/2014 sundry debtors of rupees 1 lakh. Bad debts written off is rupees 10,000, which is given in adjustment that should be noted. Provide at 5% provision for bad and doubtful debts and 2% provision for discount on debtors. So we have to see how accounting entries have to be passed and what will be the effect of these entries in P&L and balance sheet. So first we'll pass the accounting entries, or we'll call it as adjustment entry. Bad debts, is it an income or expense? It is neither income nor an expense. So is it a loss or gain? It's a loss. So debit all losses. Bad debts being a loss, it should be debited. So what is a bad debts amount? In adjustments you have a look at bad debts is 10,000. So it's a loss, it should be debited. So bad debts account debit, which is 10,000. And what is the effect of bad debts? It will reduce one asset. What is the name of the asset? Sundry debtors. Bad debts will reduce the sundry debtors, and asset will always have debit balance. When it is reduced, it will have credit balance. So sundry debtors will have credit balance to the extent of 10,000. So sundry debtors account which is credited, which is 10,000. So this is the adjustment entry, and what's going to be the impact of this bad debts? It will find a place in profit and loss account. It will find a place in balance sheet also. So we'll open a small P&L account here. P&L account. Let us also open a balance sheet here. Sundry debtors, is it an asset or liability? Yes, we know it's an asset. Yeah. Sundry debtors will find a place on the asset side. So we'll write sundry debtors. What was the amount of sundry debtors? It is available in the question, it's 1 lakh. So we'll write 1 lakh. And what's the impact of bad debts? Bad debts will reduce or pull down the sundry debtors. So we should reduce bad debts from sundry debtors. Less bad debts. How much it is? 10,000. So this is one leg, that is the credit which we have done. And what's the debit effect? Which will find a place in P&L on the expenses side. So 2 bad debts, how much it is? 10,000. So in this way we have given effect for bad debts in P&L, in balance sheet, and we have also passed the accounting entry. Next, the question says also provide 5% provision for bad and doubtful debts. Now what is the debtors available for the company? It is 90,000. So on this 90,000 provision have to be made, because already 10,000 has been accounted as bad debts. The company expects 90,000 will be recovered. Even then company believes some 5% will not come. So company says provide for those 5% also. So less provision for bad debts, bad and doubtful debts. So I'll write bad debts at 5%. So this 5% is going to be 4,500. So 90,000 minus 4,500 is going to be 85,500. So this is one leg. What's going to be the other leg? There should be effect for this 4,500 in P&L. What is the purpose of creating provision? We have to reduce the profit to the extent of this 4,500. So when the event of default, when the event of bad debts take place, at that point we need not take it to P&L. We can just take it to provision for bad and doubtful debts account. So the other leg will be, it will be shown on the P&L like bad debts. It will be shown on the P&L to provision for bad and doubtful debts. And amount is 4,500. So what could be the accounting entry for this? See, provision is something which we estimate. So it is directly charged to P&L. We have shown on the debit side of the P&L. So we will debit P&L account, profit and loss account debit, and By debiting, what we have done is we have created a provision. Provision is basically a liability. It can be shown on the liability side or it can be shown as deduction on the asset side. So we have created a liability which is named to provision for bad and doubtful debts. So we have P&L account debit, which is 4,500, and provision for bad and doubtful debts, which is 4,500. So this is going to be the accounting entry for provision for bad and doubtful debts. But the question is not over. The question says we have to provide 2% provision for discount on debtors also. Students, if you look at here, the company had a debtors of 1 lakh, of which 10,000 is irrecoverable. So only 90,000 is recoverable. And out of 90,000 also, company expects 4,500 may not turn up. So the good debtors for this company is only 85,500. Now the company says, since they are going to be good debtors, they are going to pay, they may pay in advance. So we have to give them discount when they pay in advance. So how many are going to pay in advance? At least 2% are going to pay in advance. So we have to provide them discount. So provide 2% provision for discount on debtors. So we'll write less provision for discount on debtors. Provision for, I'll write it here, provision for discount on debtors at 2%. So 85500 into 2%, which is going to be 1710. So the net debtors of the company is going to be 85500 minus 1710, which is going to be 83,790. So this is the net debtors for the company which they can actually get as cash. But what's going to be the other leg? We have just provided for 1 leg, that is we have shown it as a deduction from sundry debtors. The other leg is it will find a place in P&L. So we'll write to profit and loss account. I mean, it will find a place in profit and loss account in the name of provision for discount on debtors. So to provision for discount on debtors. And what is the amount? It is 1710. It is 1710. And what is going to be the real accounting entry for this? I have space here, so I'll write accounting entry, or say adjustment entry, for this provision for discount on debtors. Provision is an estimation, so we are directly providing it in P&L. So P&L account is debited, profit and loss account debit, and we are creating a new liability which can be either shown on the liability or it can be shown on the asset side as a deduction. We have shown it as deduction on the asset side. So we have created a liability. Liability will always have a credit balance. So to provision for discount on debtors. So the amount in both places is 1710. Thank you, students.